Hi, I'm Angie Austin with Oil and Gas 360, and we're at Intercom's 2015 Oil and Gas Conference in Denver, the 20th conference, and we're joined by Stephen Guidry. He is the chairman and CEO with Vaalco Energy Incorporated. And Stephen, have you been coming to these conferences for a while?
I have been. 2014 was a very busy year as far as investor conferences. I was new in my job, and so I tried to make a number of conferences, really just to introduce myself to the investor community.
Well, and you have an interesting history because you say new in your job. You've been in the industry for many years and retired and got yourself into quite a fascinating situation here in your new position.
I did. I was 33 years with Marathon Oil Company, 20 years domestic U.S., 13 years international. And after 33 years, I felt maybe it was time to try and do something different. I retired from Marathon, and Vaalco happened to be looking for a new chief executive officer. And perhaps not so coincidentally, Vaalco's operations were in Equatorial Guinea, Gabon, and Angola, which happens to be the exact same three countries that I was working in with Marathon Oil Company. So it was a nice fit.
It sure was. Not many people with your qualifications that would be such a good fit for them. So you came out of retirement.
I did. Came out of retirement and joined Vaalco Energy, and it's been a great experience.
And things have changed. The climate. There's been a downturn since you took the position just shy of 2 years ago.
There has been. I tell people that this is not new to me. It's not new to those in the industry that are sort of my contemporaries. The first 20 plus years of our career were really about depressed oil price and cost reductions and looking for ways to try and improve margins. And we find ourselves back in the same scenario that we were in for the first 20 years. So we've been trained for this.
Yes, you're prepared, definitely. All right, let's talk about two new platforms. Vaalco installed two new platforms in the Etame permit offshore Gabon in 2014, and the company is continuing to develop the asset. So what developments are in store for Etame for the rest of this year?
Yeah, let me back up to the installation of the two platforms. Our team designed, constructed, transported, and installed the two platforms I guess they were installed in September and October of last year. I'm extremely proud of the work they've done because they were able to install those platforms only one day off the schedule that had been built some 18 months earlier. So an outstanding execution job by the team in getting those platforms built in the U.S., transported to Africa, and installed.
Quite an
very proud of what they've done. It was quite an undertaking, and they did a fabulous job. So we're very proud of what they've done.
Should be.
We have since been drilling wells off these platforms. Most recently, we just completed a well we called the Southeast Etame 2H well, which really surprised us and came on at a production rate beyond our expectations, some 3,400 barrels of oil per day, which we're very excited about. So we continue to have success with our development, and for the rest of this year, we're currently drilling a well that we call the North Tchibala 1H. North Tchibala 1H is being drilled to a new reservoir that's never been produced before in the Etame field. It's a reservoir that has been defined very well by 4 wells that were drilled by prior operators of the block back in the 1980s. So we know very well what's there, but it's never been produced. And we're very excited to have the first opportunity to produce this new reservoir in the North Tchibala well. We hope to have that well online by mid to late September, so we're pretty excited about that.
I'll bet you are. All right, let's talk a little bit about production. Volumes from Etame 2H were already exceeding expected 2015 peak volumes in terms of gross production in mid-June. So how does production look at the Etame 2H well now?
The well has, we've seen some early stage decline, which is typical for wells like the Etame 2H, but the well is still far beyond what we originally expected. So we're still very happy with the results from that well. Absolutely.
That must be so wonderful when you're expecting this and you get this. I mean, what a great day that is.
Yeah, it is. It is. And but to be clear and to be fair, in our business, some days you expect this and you get this.
Right.
And so it all washes out, but
Right.
you hope that the ups are more than the downs.
Yes, absolutely. All right, let's talk about this West African location. What are the unique challenges and the advantages to operating in West Africa, which you did before and you're quite familiar with?
Right. And it's something that comes in very handy dealing with West Africa. First off is just the remote nature of the operations.
Well, and getting those platforms, building them here and getting them there, I mean, that's a unique challenge.
Right, unique challenge, not to mention we transported them during hurricane season.
Oh.
And so there were some moments there that were fairly tenuous, hoping that we would be able to dodge them, and we were successfully able to dodge any hurricanes, but we got them across, got them installed. But it speaks to the need for proper planning. When you're conducting oil and gas operations in West Africa, everything has to be pre-planned. You can't decide on a whim that tomorrow you might need a piece of equipment or you need someone to provide a certain service. All of this has to be thought of well in advance because of the time it takes to get equipment and manpower to these remote locations. The second thing I think that is a challenge is dealing with the foreign governments. Like I said, experience has served me well. I've spent quite a bit of my career dealing with governments of sub-Saharan Africa, and it can be a challenge. The governments struggle oftentimes to balance their budgets, and so oftentimes you find the governments leaning on the production operators, looking for ways to try to generate more revenue from the oil and gas operations, and so you have to have experience in dealing with the governments and knowing how to sort of navigate your way through what is sub-Saharan African government interventions. So those are two of the key challenges. I think from an advantage standpoint, West Africa is the subsurface. In other words, the oil and gas reservoirs are of high quality, and in my mind represent to a large extent lower risk than maybe like offshore Gulf of Mexico type operations. So there's lower risk. And the other thing I'd say is that we also have less competition in places like West Africa. And so we're at an advantage, I feel, in that we're the only American company producing in Gabon today, and I think that creates a bit of a calling card for us, and so we're very proud of that fact.
Absolutely. Well, I can see why they went after you when you left Marathon, because there are so many little idiosyncrasies about operating there.
Fair point.
All right, let's get into some more in-depth financial questions. At the end of the second quarter, Vaalco reported total liquidity of $128 million, and you said that cash combined with cash flow from operations would fund 2015 and 2016 operations. So you've got $50 million undrawn on your $65 million credit facility. The company announced a share buyback program of 5.8 million shares. How else does Vaalco intend to leverage its balance sheet through the balance of 2015? Now that's quite a question.
That was quite a question. First and foremost, it's paramount for us to protect our balance sheet. Vaalco has always been a company that financially has been very conservative. We've always looked to embark on projects that we could fund with either cash on our balance sheet or with our cash flow, and we've been very successful at that. We have very little debt, only $15 million in our credit facility that's actually drawn. To leverage our balance sheet, I'd say our focus is really around cost control, especially in this environment, looking for ways to reduce our costs, our overall costs, and improve our margins, protect our margins. That's a key focus of ours in terms of leveraging our balance sheet. The other thing I would say that we've done that we think it was an appropriate move is we recently announced a share buyback program. As you mentioned, the 5.8 million shares. We just feel like our share price had gotten to the point where it was an outstanding investment opportunity for the company, and so we took that opportunity, and we think it also demonstrates the confidence that we have in our long-term strategy and where we think our company is headed.
Excellent. All right, so for some final thoughts, if the commodities pricing environment stays about where we are now, where do you think the industry will be in 2016, and what are Vaalco's goals for 2016?
Well, I think we'll continue, as an industry, we'll continue to see costs being reduced. I think we have not yet seen the full impact of contractors reducing their cost schedules. I think we'll continue to see day rates for drilling rigs continue to drop as we move into 2016, which is good from an operating standpoint. Of course, all that comes on, with the tough medicine of low oil price, which makes it that much more difficult for us to maintain our margins. As far as Vaalco is concerned, 2016, we're going to have a much lower capital expenditure in 2016. We'll get our development program in the Etame block behind us, and we believe 2016 will be a great year for us to generate additional cash flow in this lower CapEx spend, and hopefully, as we've reduced our operating costs, that also will contribute to improved margins. So we think 2016 will be Vaalco will see itself as building cash in 2016.
Has it been fun to come out of retirement and take on this new challenge?
It has been. It kind of speaks to you have to be prepared for just about anything. I came into Vaalco, the company had we were at $110 oil, and we had a certain strategy and plans, and all of a sudden you find yourself with your revenue stream cut in half. So you have to be able to adapt, and so it's a different kind of challenge, but it's challenging nonetheless.
Yeah, well, very interesting to find out a whole new area in West Africa, and to do the interview with you. It was fun researching you, Stephen. I'm Angie Austin with Oil and Gas 360 here at the 2015 Intercom Oil and Gas Conference, and we just did our interview with Stephen Guidry, Chairman and CEO with Vaalco Energy Incorporated. Thanks, Stephen.
Thank you.